Hi everyone, welcome back to the Money Markets. In this video, we're going to cover Q1 results of SBI cards. As we see, the total income was reduced year on year 5% on quarter 13%. And the finance cost is also reduced 9% year on year and 18% quarter on quarter basis. This shows that the finance cost reduction will actually impact it directly to the bottom line profitability. As we see the profit levels, as and compared to the last year, it was 14% increase, and quarter on quarter it was 371% increase. This was a commendable results, and this shows completely the management efficiency in the business. Whereas we come to the total income, why income was reduced? It was reduced because all the other segment other than interest income. So interest income is the main component for the credit card segments, and it shows a complete commendable growth in this interest income segment, which shows that 5% increase on quarter basis and 35% increase in year on year basis, and all the other segment of income was in a negative trend. But this actually interest income drives the business into positive mode, and it will continue in further as well. And the finance cost, as you see, it was reduced, and this is all the areas which bottom line impacted in a positive mode. And come to the key areas where the new accounts was increasing from April, May, June. April was a lockdown situation. As due to lockdown, the new accounts will also not rise, and the corporate and retail spending is also a little less when compared to the other months. The other months as actually higher. It was growing. And when come to the credit card segment in India, India is only having around 1% of the total population is using credit cards. So there is a lot of opportunity we are having, and its growth will also be very higher when compared to the other countries. And SBI cards is right now a second leader. The first one is HDFC. HDFC is having a greater amount of market right now, but SBI cards is going to be a leader. Why? Because the SBI card is the segment which is linked to the SBI, and there are a lot of SBI shareholders which are not having credit cards, and it can be easily penetrated by this SBI card instead of HDFC. So this was having a greater opportunity for this credit card segments. When come to the shareholding pattern, as you see, the shareholding with the promoters are very higher. This actually indicates that if a share is in a positive mood, it actually drives its price easily, as most of the holding with promoters, and only less amount was trading in stock market. When come to the levels and targets, as you see, after its IPO, it retraces its price again. The 555 is a subscription price, and it come to that price after a high fall due to this COVID situation. So if anyone not entered at a lower price, whether they enter at this price, no. Why? Because it was overbought at this situation. And let's see in the levels and targets. As you see, after a bottom of 500, it was retraced to higher levels of 765 right now. This was happening with a trend. As you see the clear trend which is happening, higher highs and higher lows. So this was overbought situation right now, and it will retrace definitely to the price of 720. At 720, it takes the greatest support, and again it will shoot ups. So if anyone not entered at this stock, then wait for 720, and then they can enter and keep it for long term. It's a portfolio stock. It's a portfolio stock, and its target, it can easily achieve 1000 plus in a short period of time. So this is about the SBI cards. Have a great day.